What's up, everybody, and welcome to another trading analytics video. I'm Trade Earner, and man, the day has finally come. The markets got the Fed rate decision, and we got a 50 basis point cut. Now, before we get into what that means for the overall market, if you guys haven't already, like, comment, and subscribe to the channel if you enjoy this type of content, because it really does help us out a lot. Additionally, if you guys haven't also, check out our Discord server. The link to that is in the description of this video, as well as in our channel bio. We had an incredible trading day today, especially on our live trading section. But that's a story for another day. Again, link to that in the description of this video below. Now let's get into the content. So, as mentioned before, Fed Chair Powell came and spoke to the overall market, gave a 50 basis point cut from the Fed. And the initial reaction for the market was a huge pop, right? SPY actually established a new all-time high at 568 and rejected from the upper levels of that area to actually close the day below 562. 563. Now, one thing you want to keep an eye on with SPY and the historical precedence of rate cuts and the overall market effects is that we usually see a pop right at the gates if we do get rate cuts. However, the overall market tends to react pretty bearishly once the rate cuts are going to be implemented, because there's a lot of fears about the overall economic health, and the fact that lower rate cuts mean people are going to be waiting for even lower rate cuts. And that is a fear of a lack of economic stimulation because of that reason. Now, looking at SPY from a purely technical standpoint, you can see here that we had a double bottom bounce from this nice trend line on the daily up to the previous all-time high of 567, which we had rejected from the day before. Got our wick above 568 today and got our candle close below 567 once more. So that established itself as a pretty hefty resistance for the bulls to be able to break through. Now, we got a gap down here to close at 560. I think that there's a pretty good chance that we will close that towards the downside, retest this upper level resistance at 559, and then look to close below that to retest this upward trend line to either establish a new higher low, or if that trend line fails and we fall below it, we'll look to validate this as a double top zone and get that neckline break to send us even further down. I'm leaning more in the bearish camp overall long term for this ticker. I do think that we can get into some longer term short swings based off of the price action, but again, let the price action do all the talking. Now, jumping over here to QQQ, similar situation to SPY, but you can see here that we had two trend lines. We had the upper trend line as similar to SPY off the double bottom, but we have a clear down trend line as well, which we see here. We have been actually signaling lower highs on the Qs for the last few months. And as you can see, we tapped this down trend line twice. We tapped it yesterday, rejected, closed below. Today, we wicked above on the pop from the rate cuts, and we closed below yet again. We're riding the upper level of the Bollinger Band, but it looks to me that we're going to close this gap down here at 464, and that gap at 464 is going to lead us to a retest of this upper trend line. And I do think that if this does fail, we're going to lose 453 and drop all the way down to look to close this gap here around 435. So that's what I got for the Qs. I do think that this trend line will fail, and if it does get a bounce, the upper trend line resistance is getting ever so closer, so the bounce is going to be relatively smaller, and it's going to validate another lower high. So what we got in the Qs. Jumping over to the financial sector, XLF is an interesting spot, because if you look at names like JPM, Goldman Sachs, they're all flashing bearish signals, bearish consolidation in JPM's case. But in XLF, you can see that we actually had an all-time high or close to all-time high retest earlier today, again, following that pop directly from the Fed's rate decision to cut by 50 basis points. And you see here, we rejected pretty heavily, and we bounced right off of the downtrend line that we have established on the daily chart for XLF. Now, the thing with XLF that's pretty interesting is that we have an uptrend line that's pretty close to where the downtrend line is as well. So that means we have even less room to recover and bounce towards the upside if we do. But again, just looking at the overall names in the XLF ETF, you have JPM, Goldman Sachs, and numerous other banks that are pretty heavily weighted. But for those two, which are my favorites to trade out of the bunch, I should say, we have a quite of a significant bearish patterns forming. And in Goldman Sachs case, we have a nice inverted cup and handle on the daily. And in JPM's case, like I mentioned before, we have a bearish consolidation. We already took JPM calls to the upside earlier this week, got over 100% on those. And I do think that it's pretty possible that we can retest these new lows here and close some of these gaps down on XLF as well. Finally, I want to take a look at XOXX, the chip ETF, and this has been getting beaten down pretty heftily today. Something that you want to see, you see that we have a downtrend line. We closed gaps down a few weeks ago to retest 237 as a resistance area. We rejected from there, and we got this gap closed at 212, consolidated, formed dust, double bottom bounce here, and bounced up until we reached that downtrend line that was established again back in July. Similar trend, all right? You guys noticing the pattern with all these major ETFs and other tickers? Downtrend lines are pretty heavily focused right now, right? But again, the thing that gives me pause to look for any further upside in the chip sector is this. We got a candle close right below the downtrend line 2 days ago. We wicked above, opened well above that downtrend line. However, we closed right at the level yesterday. And then today, we opened above it once more, wicked all the way up here to 224, and we rejected and actually had a candle close below the trend line on the daily once today's trading session was over. That was in part due to NVIDIA getting blasted, as well as some of the other chip names, AMD, etc. But the fact that we are unable to hold above the trend line leads me to believe that there is some significant weakness in the market. So again, I know I sound like an unmitigated bear, but I'm just playing what the charts are showing, right? The news gives the charts the volume, the charts tell you what they wanted to do. And I do think, again, with all these bearish indicators overall in the market, that it's far more likely that we're going to get a pullback heading to the end of September, gearing us up for a nice little rally before it's second week of October, all the way through December to complete our Santa Claus rally. And I think that that's when the market will retest and establish new all-time highs in the middle of Q4. But in any case, that's what I got for you guys today. The Fed decision was some of the most anticipated news that we've gotten in the market all year long. We've been waiting for this day for quite some time now. We were supposed to get our first cut back in March. Here we are in September, and the investors and traders, the reaction showed the excitement right out the gates. But in any case, again, I've been Trade Runner. This is Trading Analytics. If you guys haven't, like, comment, subscribe if you enjoy this type of content. And if you also have not, check out our Discord server. Link to that is in the description of this video, as well as in our channel bio. We do things like live trading events. We had an incredible live trading session with one of our traders. Ace Trades gave out a 200% IWM put right from the outset. And it's just been a beautiful, beautiful ride. But again, thanks for watching, guys. I'll catch you in the next one.